Right now, at this very second, the absolute smartest value investor walking the face of the earth is sitting on a truly unprecedented $380 billion in pure cash. Let that staggering number sink deep into your mind for a moment, because it is not just a random figure on a balance sheet. $380 billion sitting completely idle in cash reserves while the rest of the financial world is screaming at you to buy. Every time you open your phone, you see financial influencers bragging about their massive overnight gains, and yet the greatest mind in the history of finance is entirely refusing to buy stocks today. Why is that happening? Why would a man who spent his entire life mastering the art of acquiring businesses suddenly stop everything and hoard the largest cash pile in corporate history? The answer to that question is going to change the way you look at money forever. He is silently signaling that a catastrophic market crash is looming right around the corner, and he is preparing to buy up the world for pennies on the dollar. Welcome to David Marshall Finance, where we uncover the hidden psychology of wealth so you can secure your retirement security and stop falling for Wall Street traps. My name is Dave, and if you want to understand how the top 1% actually manipulate the markets, hit that subscribe button right now, because today I'm going to reveal the elite passive-aggressive investor strategy that will protect your family when the looming crash finally hits. The reality is that most normal people think investing means you have to be constantly doing something. They think you need to be trading every single day, reading every financial news article, and swapping stocks like baseball cards. But the absolute elite players know a fundamental truth that you are completely ignoring. We make our money when we wait. I know that sounds completely backward to everything you have been taught about the stock market. How in the world do you generate massive wealth by doing absolutely nothing at all? That is the exact mystery we are going to unravel over the next few minutes, and the truth is going to shock you. To understand why this massive cash pile exists, you have to completely change your perspective on what the stock market actually is. The absolute smartest investors do not look at the market as one single entity. Instead, they see the stock market as two completely different buildings sitting right directly across the street from each other. On the left side of the street, you have the casino. On the right side of the street, you have the church. Right now, in our current economic environment, the casino is completely packed with screaming people. The neon lights are blinding, the music is deafening, and millions of average retail investors are throwing their hard-earned money at the tables. This is what we call the casino gambling mood, and it has completely infected the modern financial system. People are buying one-day options hoping to strike it rich before they go to sleep. They are treating the global stock market like a slot machine, pulling the lever over and over again, hoping for a jackpot. But let me be completely clear with you. This is pure gambling. This is absolutely not investing. The tragedy is that these amateur traders genuinely believe they have an edge. They see their portfolio turn green for 3 hours and they suddenly think they are financial geniuses. But they are completely blind to the trap they are walking right into. This overwhelming gambling mood has driven stock prices up to incredibly silly and highly overpriced levels. The market is completely detached from reality. Right now, Wall Street prices things for perfection. We wait for them to go on sale. When you price a company for perfection, you are making a very dangerous assumption. You are assuming that interest rates will never go up, that supply chains will never break, that consumer demand will never drop, and that inflation is gone forever. But if you have lived on this planet for more than a decade, you know that perfection is a total illusion. Things always break. Unexpected disasters always happen. And when they do, the people inside that loud, noisy casino are going to lose absolutely everything. Now look across the street at the church. The church is completely silent. There are no flashing lights and no screaming crowds. Inside the church, you find the true masters of the value investing strategy. These people are sitting quietly in the pews, patiently calculating the true intrinsic value of businesses. They do not care what a stock price did yesterday, and they do not care what a bunch of gamblers think it will do tomorrow. They are perfectly content to sit on their hands and maintain extreme waiting discipline. They understand that the casino always burns down eventually. And when the casino gamblers are forced to liquidate their portfolios at rock-bottom prices to pay off their massive debts, the quiet people in the church will calmly walk across the street and buy up all the world-class assets at a massive discount. That is the exact reason why the greatest investor on earth is holding $380 billion in cash reserves right now. He is just sitting in the church waiting for the casino to self-destruct. But that brings us to a massive question that you need to be asking yourself right now. When the crash finally happens and the market is bleeding, how do you know exactly what to buy? How do you separate the actual garbage from the temporary bargains? This is where you have to develop a real edge over Wall Street. Most everyday investors think Wall Street is completely invincible. They think that because these massive hedge funds have supercomputers and billions of dollars, they cannot be beaten. But Wall Street has a fatal psychological flaw that they try desperately to hide from the public. Their biggest weakness is their extreme short-term bias. You see, the highly paid mutual fund managers on Wall Street are terrified of losing their jobs. They are strictly judged on their quarterly performance. If a fund manager has 2 bad quarters in a row, their wealthy clients will panic and pull all their money out. Because of this massive quarterly pressure, Wall Street is physically incapable of waiting 2 to 3 years for a business to fix a temporary problem. The moment a great company hits a speed bump, Wall Street panics and sells the stock. This creates the most lucrative opportunity in the world for the passive-aggressive investor. Having an edge simply means understanding a specific business deeply enough to know that a temporary problem putting its stock on sale is going to get fixed in the near future. Let us look at a real-world example using Apple under the ticker symbol AAPL. Imagine that next month Apple announces a massive supply chain disruption in their overseas factories. They announce that their profits for the next 2 quarters are going to be severely reduced. What do you think Wall Street is going to do? The analysts will absolutely panic. The algorithms will start dumping shares automatically. The casino gamblers holding one-day options will get completely wiped out. The stock price might plummet 30% in a matter of days. Wall Street prices things for perfection. We wait for them to go on sale. While the entire financial media is screaming that Apple is doomed, you are sitting quietly in the church with your massive cash pile. You know that Apple has a fiercely loyal customer base, an incredible ecosystem of products, and billions of dollars on their own balance sheet. You know exactly what their true intrinsic value is. You understand that this factory issue is just a temporary roadblock that will be completely resolved in a year or 2. Because you do not have a boss breathing down your neck demanding quarterly profits, you can afford to be patient. You step in and buy shares of one of the greatest companies on earth at a massive, ridiculous discount. You win simply because your time horizon is longer than Wall Street. You are playing chess while they are playing checkers. But to execute this strategy without letting your emotions completely destroy you, you must internalize a very specific mental framework. This framework was perfected by a legendary business mind named Tom Watson Sr. Tom Watson built IBM into an absolute global titan, and he operated by one simple, unbreakable rule. He told the world, "I am smart in spots and I stay around those spots." I want you to really think about the profound genius hidden inside that simple sentence. The Tom Watson Sr. rule is the ultimate secret weapon for the passive-aggressive investor. You do not have to understand too many businesses, just stay in your spots. Your spot is your personal circle of competence. It consists of the specific industries, the products, and the business models that make complete logical sense to your individual brain. If you have spent your entire career working in the transportation industry, then logistics and shipping are your spot. If you understand how medical devices are manufactured and sold, then healthcare is your spot. The absolute worst financial disasters in history happen when an investor gets bored and decides to step completely outside of their spot. They look over at the loud casino across the street and they see some kid making a fortune on a brand new obscure software company. Greed takes over and they throw their hard-earned money into an industry they know absolutely nothing about. Let us imagine a guy named Marcus. Marcus is an incredibly successful mechanical engineer who knows exactly how heavy machinery companies operate. Heavy machinery is his spot. But Marcus gets swept up in the casino gambling mood and decides to take his retirement savings and buy shares in a speculative biotech startup that is trying to cure a rare disease. Marcus knows absolutely nothing about biology or FDA trials. He completely abandons the Tom Watson Sr. rule. When the biotech company fails its clinical trial and the stock plummets 80%, Marcus is completely lost. He has no way of calculating the true intrinsic value of the company because he never understood the business in the first place. He panics and sells at a massive loss, wiping out years of hard work. Marcus lost everything because he tried to play a game he did not understand. If Marcus had simply maintained extreme waiting discipline and kept his money safely inside his own spot, he would be wealthy. When you strictly stay in your spot, you become completely immune to the dangerous gambling mood that destroys so many lives. You stop caring about the hot new trends and the flashing neon lights. You simply wait with your cash reserves for a company you deeply understand to become a massively underpriced market opportunity. But I have to warn you right now. The level of patience required to actually pull this off is agonizing. It goes against every single human instinct you possess. To prove exactly how much patience is required, I want to share a staggering historical metric with you that most financial advisors will never tell you. Over a massive timeline of 60 years in the professional investing business, the absolute smartest minds will admit that only 5 of those years were truly juicy. Let me repeat that because it is the entire foundation of true generational wealth. Out of 60 long years of staring at the global stock market, only 5 years provided the deep, juicy opportunities where world-class assets went on a massive fire sale. Think about the gravity of that statement. 60 years yielding only 5 truly juicy years. That means for 55 years you are basically just sitting around waiting. If you are constantly buying and selling every single week trying to chase tiny profits, you are totally guaranteed to miss those rare juicy moments. Why? Because when that perfect pitch finally crosses the plate, you will not have any cash left to swing the bat. We make our money when we wait. The discipline of sitting on a $380 billion cash pile is the discipline of waiting for one of those 5 extremely rare juicy years. But how do you actually survive the agonizing waiting period without losing your mind? It is incredibly difficult. Your neighbors are going to brag about the new boat they bought with their casino winnings. The talking heads on television will call you a fool for holding cash while the market goes up. Your own brain will try to convince you that inflation is eating away at your retirement security. But the true passive-aggressive investor knows a secret about cash that the amateurs completely miss. Cash is not just a piece of paper losing value to inflation. Cash is stored financial energy. It is absolute total optionality. It is a fully loaded weapon waiting to be fired at the exact moment of maximum market panic. You are completely passive and boring during the years of overpriced perfection, but you become violently aggressive the moment the market collapses and true intrinsic value goes on sale. But this leads us to the most important question of the entire video. What actually causes these rare juicy markets to appear? If everyone knows that stocks generally go up over the long term, what could possibly terrify the massive Wall Street institutions enough to make them sell their absolute best assets at half off? The answer is something called the out-of-the-blue trigger. You see, the stock market does not crash politely. It does not send you a warning email letting you know that a massive fire sale is scheduled for next month. Major juicy markets only happen when a completely unexpected black swan event occurs totally out of the blue. These are massive geopolitical shocks, sudden global supply chain failures, or unprecedented technological disruptions that absolutely no financial model ever predicted. Wall Street builds all of their fancy algorithms based on historical data. They look backward to predict the future. This makes them completely blind and totally vulnerable to the out-of-the-blue trigger. When a true black swan event finally hits the global economy, uncertainty skyrockets to a level that breaks the Wall Street supercomputers. The algorithms start dumping stocks. The mutual fund managers face massive redemption requests from terrified clients. The casino gamblers who were trading one-day options get completely wiped out as their brokers call in their margin loans. It is absolute pure financial terror for anyone who is unprepared. But for the disciplined value investor sitting quietly in the church, this panic is the ultimate dinner bell. Because these out-of-the-blue events cannot be predicted by any human being, you must simply wait patiently in cash. You cannot time the market and you cannot guess the specific year the black swan will arrive. All you can do is maintain your cash reserves and practice extreme waiting discipline. When the shock hits, the market completely stops pricing for perfection. In an instant, the market begins pricing for the apocalypse. Fantastic businesses with incredible cash flows and impenetrable balance sheets get thrown into the garbage bin alongside the truly terrible companies. The short-term bias of Wall Street forces the institutions to sell everything they own at any price just to survive the week. And that is exactly the moment when your massive cash pile goes to work. This elite value investing strategy is not about trying to predict an unpredictable future. It is about being perfectly prepared for whatever the future brings. So how do you actually piece this entire complex financial puzzle together to secure your own ultimate retirement security? The very first step is that you have to completely permanently abandon the casino. Stop trying to guess what the stock market is going to do tomorrow, next week, or next month. Stop chasing after one-day options and engaging in the toxic gambling mood that is designed specifically to drain wealth from the middle class and hand it to the elite. You have to step out of the flashing neon lights, walk calmly across the street, and take your seat in the quiet church of value investing. You must recognize that Wall Street has a massive structural flaw in their short-term bias, and realize that your greatest advantage as an individual everyday investor is your simple ability to wait. We make our money when we wait. You need to start aggressively building your own cash reserve starting today, even if it feels incredibly boring and counterproductive. You have to understand that boredom is the exact price you pay for guaranteed long-term success. Our entire society conditions you to crave immediate dopamine hits and instant gratification, but true unshakable retirement security demands severe delayed gratification. The next step is that you must clearly define your spot based entirely on the Tom Watson Sr. rule. Ask yourself right now, what specific industries do I actually understand better than the average person? What types of businesses could I successfully evaluate even if the stock market completely shut down and I could not check the stock price for 5 straight years? Remember the golden rule: you do not have to understand too many businesses, just stay in your spots. Take a piece of paper and write down 3 to 5 industries where you have a genuine real-world edge based on your career or your deep personal interests. Study the absolute best, most dominant companies within those specific spots. Learn how to calculate their true intrinsic value based on their actual cash flows, their debt levels, and their competitive advantages in the marketplace. And once you have built your watch list of incredible world-class companies, you do the hardest thing in the world. You do absolutely nothing at all. You sit on your hands, you wait. You wait for the out-of-the-blue trigger to arrive. You wait for Wall Street to completely panic over a temporary quarterly earnings miss. Wall Street prices things for perfection. We wait for them to go on sale. When that highly anticipated juicy year finally arrives, and history promises us that it will absolutely arrive, you take your meticulously saved cash pile and you buy those world-class companies aggressively and with absolute total conviction. Let us imagine a woman named Alina who has spent her entire life working in the agricultural supply chain. She understands farming equipment, fertilizer distribution, and crop cycles better than any analyst on Wall Street. Agriculture is her spot. During a massive tech bubble, everyone she knows is getting rich buying overpriced software stocks. Her friends laugh at her because she refuses to play in the casino. She completely ignores the one-day options and the rampant gambling mood taking over the country. She just goes to work and stacks cash. Then an out-of-the-blue trigger hits the global economy, causing a severe international shipping crisis. Agricultural stocks plummet by 40% because institutional investors are forced to liquidate their holdings to cover their short-term margin calls. Alina looks at the underlying agricultural companies and calculates their true intrinsic value. She realizes that the world still needs to eat, and that these companies will generate massive profits once the temporary shipping panic is resolved. While the casino gamblers are weeping over their totally destroyed portfolios, Alina walks calmly into the smoking wreckage of the market with her massive cash reserves and buys premium world-class agricultural assets for literal pennies on the dollar. She deeply understood the Tom Watson Sr. rule. She knew exactly what her spot was. She maintained flawless extreme waiting discipline, and she successfully capitalized on a massively underpriced market. This is the exact mechanism of how the greatest fortunes in human history are legally and ethically transferred from the impatient many to the patient few. It is not some dark magic trick. It is not illegal insider information. It is simply the beautiful, brutal reality of extreme waiting discipline. If you can completely master this passive-aggressive investor mindset, you will absolutely never have to worry about your retirement security ever again. You will sleep incredibly peacefully at night while the rest of the financial world is running around in a total panic. You will train your brain to look at terrifying market crashes not as world-ending disasters, but as the ultimate wealth-building opportunities of your entire lifetime. The fact that the smartest investor on earth is sitting on a $380 billion hoard of cash is not a sign of fear or cowardice. It is the ultimate sign of absolute predatory patience. It is the quiet, methodical preparation of a financial master who knows as a mathematical fact that out of 60 years only 5 are truly juicy, and the very next juicy opportunity could be born tomorrow morning. The most powerful weapon you have in the modern rigged financial system is not a super-fast trading computer or a complex artificial intelligence algorithm. Your single most powerful weapon is your patience. Thank you so much for joining me today on this deep dive. I truly hope this breakdown of the psychology behind the church versus the casino has completely shifted your fundamental perspective on how real wealth is actually created. If you found immense value in this video and you want to continue building your unstoppable financial edge with me, make sure you hit that subscribe button right now before you leave. Here at David Marshall Finance, we absolutely do not follow the blind screaming herd. We wait patiently for the herd to make massive, irreversible mistakes. Keep building your massive cash reserves, stay strictly inside your spots, and always remember that true lasting generational wealth is exclusively rewarded to the patient. I will see you in the very next video.